Is United Airlines soaring to new heights, or are they heading for turbulence? While their profit outlook is surprisingly optimistic, a crucial piece of the puzzle, revenue, is missing, leaving investors and analysts scratching their heads. Let's dive into United Airlines' latest earnings report and see what's really going on. United Airlines, UAL, recently released its projections for the upcoming fourth quarter, and the numbers are raising eyebrows. After a somewhat bumpy ride earlier in 2025, they're forecasting earnings per share, EPS, to land between $3 and $3.50. Now, get this, Wall Street analysts were only expecting $2.86 per share. That's a significant difference, suggesting United anticipates a strong finish to the year. This is particularly noteworthy as it comes amidst concerns about the overall economic climate and its potential impact on travel demand. One key factor driving this optimism is United's strategy of expanding its flight capacity. While other airlines, feeling the pinch of too many flights and lower fares, have started to scale back their growth plans, United is doubling down. In the third quarter alone, they increased their capacity by a whopping 7% compared to the previous year. But here's where it gets controversial. Is this a bold move that will pay off, or a risky gamble that could backfire if demand doesn't keep up? You see, while capacity increased, unit passenger revenue, the money they make per seat flown, actually decreased. Domestic travel saw a 3.3% drop, and international travel took an even bigger hit with a 7.1% decline. This suggests that United might be filling more seats, but they're not necessarily making more money per seat. So how are they still projecting higher profits? One answer lies in their loyalty program, which saw a healthy 9% increase in sales. This indicates that United is successfully engaging and retaining its frequent flyers. United CEO Scott Kirby has been a vocal advocate for the airline's growth strategy. In a recent interview, he defended the plan, arguing that United is building a loyal customer base through its extensive network, investments in new technology like free in-flight Wi-Fi, revamped cabins, and enhanced airport lounges. He believes these investments made over nearly a decade are paying off by attracting and retaining brand-loyal customers. Those investments have allowed United to win brand-loyal customers, leading to economic resilience and significant upside as the economy and demand are improving, Kirby stated. Now, for the numbers everyone's been waiting for. Here's a breakdown of United's third quarter performance compared to analyst expectations. Earnings per share, adjusted, $2.78 versus $2.62 expected. A win for United. Revenue, $15.23 billion versus $15.33 billion expected. A slight miss, but not a disaster. Overall, United's third quarter revenue was $15.23 billion, a 2.6% increase from the $14.84 billion generated last year. However, net income dipped slightly by 1.7% to $949 million, or $2.90 per share. After adjusting for one-time items, including debt-related expenses, the adjusted income was $909 million, or $2.78 million per share. And this is the part most people miss. United isn't just competing for passengers anymore. They're in a head-to-head battle with Delta Airlines to attract affluent travelers willing to pay more for premium seats and experiences. United has been aggressively expanding its global network, adding exotic destinations like Greenland and Mongolia to its route map. This strategy seems to be working, as revenue from premium cabins, first class and roomier seats increased by 6% in the third quarter. On the other hand, sales from basic economy, the bare-bones, no-frills option, only grew by 4% year over year. This suggests that United's focus on attracting higher-paying customers is starting to bear fruit. It's worth remembering that earlier in the year, both United and other airlines had to dial back their initial earnings forecasts due to a dip in passenger demand caused by factors like fluctuating tariffs and an oversupply of flights. This highlights the volatility of the airline industry and the challenges of accurately predicting future performance. So, what's the takeaway? United Airlines is playing a high-stakes game. They're betting big on expansion and premium services, hoping to outpace their rivals and capture a larger share of the market. While their profit outlook is promising, the revenue shortfall raises questions about the sustainability of their growth strategy. Will United's gamble pay off, or will they face headwinds in the coming months? Do you think their focus on premium travelers is the right approach? Or should they be more focused on attracting budget-conscious flyers? Share your thoughts and predictions in the comments below.